There's been a real escalation in the war in the Middle East. There, of course, is the port strike in the United States and the US presidential election. These are things that have many investors concerned about the future direction of the market and the potential for a stock market crash. Now, in this video, I want to talk about whether there is a crash happening or whether there will be one soon, and what to look for to protect yourself against such a thing happening. I'm also going to give you some advice that I've learned the hard way from having invested and traded the stock market for over 35 years. So let's dive into just some of the logic that I use around news events. And the first thing that I really want to emphasize is that it really doesn't matter what you think, what I think, what anyone thinks. All that matters is what the market thinks. And so when we watch the news, we have to realize that the news is reflecting publicly available information, and that is therefore priced into the market almost immediately. When you hear something on the news, realize that as soon as it's out there, it gets valued by the stock market. So if there's an attack by Iran on Israel, it could have an effect on the market, and that will be felt right away. And so if you read the newspaper and think, oh my goodness, there's an escalation of the war in the Middle East, I need to sell my stocks because that sounds terrible. What you're really saying is you think you are smarter than the millions of people that invest in the stock market collectively. I'm going to show you a chart in just a moment that will show you the true reaction of the stock market to the things that have been going on. And that includes the US port strike. Port strike supposed to cost the US $1 billion a day, some have said. Well, let's see what the market thinks about that. Because you reading a newspaper or watching the financial news TV channel might hear that and go, I got to sell everything. I think a crash is going to come. Well, if that was happening, it would already be happening because it's publicly available information. Now, if you're friends with the President of the United States and you learn things quicker than anyone else, then maybe you have an advantage with information. But I'm pretty sure most of the people watching this video are not in that situation. To be effective investors, we really need to pay attention to what people are doing with their money, not what they say. And the good news is the market tells us what people are doing. We just have to know how to listen to them. So if we jump back into the Stockscores website, this is my website here. I've got a chart of the S&P 500 up, and I'm going to just draw some lines here. So this line that's drawn across the bottoms, that is the trend line on a 240-day chart. It tells us something about what investors believe is going on in the market. And here's how it works. You'll see here in July, the market fell quite sharply into the first week of August. That was because investors were concerned that the US Fed would not lower interest rates. And that got priced in very quickly. There was some economic numbers that came out that made people think that maybe inflation was a little bit high and therefore the Fed wouldn't lower rates, and that's why we saw that sell-off. The sellers were in control of the market for that 2 or 3 week period. Then the buyers came back and took back control and pushed prices up. And then the sellers took control and pushed prices down. And then in the last 2 or 3 weeks here, we had a little rally in the market pushing prices up. Over the last 4 or 5 days, we've seen prices get pushed down. So what does this mean? Well, what it creates is rising bottoms. When there are rising bottoms on a chart, it means that investors are optimistic. Why is that? Well, because every time the sellers were in control and they pushed prices down, they could not push prices as low as they had the previous time. And so that tells you that the sellers are losing their power, the buyers are getting stronger, and therefore they are in control of the market. That's a general sign of optimism. Now you'll also notice on this chart that I've drawn how the tops are not rising as quickly as the bottoms. In other words, when there's a rally to the upside, the second rally is not as strong as the first rally. And what that means is that although the buyers are still in control, they are less enthusiastic in September than they were in August because the move to the upside was less strong. And what that means then is that we have optimism, we have buyers still in control, but not as powerful as they were in the month of August. And that tells us that there is some pessimism starting to creep into the market. We still have the buyers in control, but there's some concern because the buyers are not as enthusiastic as they were before. So now then, the obvious question, when do we sell the stock market? When is the crash starting? Well, crashes don't come out of nowhere. All crashes leave clues. They tell us in advance that they're happening. And the typical crash will happen when an upward trend is broken. So if we go back to this chart, and I'm going to make this a 5-year weekly chart, and you can see that there was a crash here. That was the COVID crash. There was a bear market in 2022. That was because interest rates were rising. Well, all of those things happened when the upward trend line was broken. So there you see the upward trend line. COVID crash sent it down sharply in 4 weeks. Here we had more of a slow move to the downside for almost the whole year. It all started with a break of the upward trend line. Well, let's draw our trend line now. So if I draw a line across these bottoms, do we see a break of that line yet? The answer I know is no, we do not yet see it. Yes, we have pullbacks. We have a move up, a pullback, a move up, a pullback, a move up, and we've just started a new little pullback over the last 4 or 5 days, but we have not broken the upward trend yet. So there's no sign from people acting with their dollars, casting their opinion with their buy and sell orders. There's no indication that people are that nervous yet. There are some things to be concerned about. Let me show you. So the first is if we dive into the shorter term chart, let's take a look at the 3-month. I'm going to go daily on this one. So you can see in the very short term, we've had 4 or 5 days of weakness. Okay, well, we had that back here. We had it back in July as well. Not a big deal yet because the upward trend is intact. But let's take a look at a chart of UVXY, which is related to the volatility index. Actually, I'm going to go VXX because UVXY is leveraged and I want to get a cleaner chart. So let's go to the UV or the VXX, and you'll notice that this has been moving up for the last, 4 or 5 days. It was moving down. That meant that investors were not that concerned, but in the last 4 or 5 days, we've seen a little bit of a rise as some fear gets priced into the market through the implied volatility of the S&P 500 futures. What that means is that investors are making small bets that there could be more volatility in the future. That's what makes this go up. When I say volatility, I mean price movement. It could be up or down, but typically when the VIX rises, it's because price is expected to move down. It's not a major rise. If we compare this to what happened in July, there was a major rise in the VIX when the market was worried that the Fed wasn't going to lower interest rates as much as it had hoped. This one is relatively minor. We had a little minor one at the start of September as well. So we have some signs that there is, a little bit of fear creeping into the market, but we don't have a break of the upward trend line yet. We don't yet have falling tops building on the market charts, which would be a sign of pessimism. Let's look at one more chart. That's just the chart of gold, GLD. There you can see gold has been moving up. It's been moving up for a while. It was in a sideways range here, broke out, been moving up. That is perhaps a little bit of a move to a safe haven, but it could also be that all of the people who are listening to the headlines about war, about port strikes, about US presidential elections, they're going into Costco and buying lots of gold. And that's a real factor in the gold market right now, believe it or not. That is one of the reasons why gold is rising. Now, while we're on the Stockscores website, just go to the homepage and you'll see here on this page, this See More link. This is your free weekly newsletter. I send it out every week with my stock advice, stock picks, trading tactics. So make sure you register for that. It's free. I'm also doing, a couple times a year, I'll do some free classes on how to invest in the stock market, how to trade the stock market. So this is the first one, Tuesday, October 15th. The 5 things every stock trader must do to succeed. And then we've got one here on investing. And then we've got this one here on day trading. It's Tuesday, Wednesday, Thursday in the middle of the month in October. Free advice, free lessons. I'm happy to do those, and I hope you'll join me for those. You can register on Stockscores.com. Hope you've enjoyed this week's little special video. I know because a lot of people are concerned about what's happening in the world, that maybe a crash is brewing. I wanted to do a quick video to give you some sense of that. Make sure you're subscribed to the channel because I do these videos at least one a week, sometimes more as events warrant, and I'll always keep you updated on whether a big crash is coming or not. Hope you've enjoyed it. As always, trade well.